Good afternoon and welcome to the FX Daily Wrap-Up. And we are seeing the dollar continue to remain under pressure. This is something we've already spoken about from yesterday. We spoke about it actually from last week that as we moved into the analysis, this was our concern. Once again, just to bring that point up, which was with collapsing U.S. interest rates. One can make the point, oh, well, interest rates are starting to turn. Look, the overall driver has been interest rates have been falling, a divergent, Federal Reserve, and now, as my mom used to say, actions speak louder than words. Well, in this case, market actions, falling interest rates, which certainly curb that thought with the idea that there was potentially going to be a cut in as early as fall. Would obviously now we're pricing in as many as 3 or 4 now till the end of the 2020, and we've seen this basically come to fruition. One of the things that we covered yesterday, the dollar CAD, and we covered this on Friday. We actually from last week, how many times has this thing peeped above the foxhole and got shot down, and finally closed above and then started to did it on Thursday. We took off on Friday, but we failed. But we held above the 135. But we said, once again, the daily candle has bulls concerned. A daily close below 430, below 34.77 will initially target a test of 33.82. Wham, bam, thank you, man. We're just a few pips away from 33.82. And I did go on and say repeatedly, we get that close below 34.77, it is a sell. And we talked about that this morning. Really, any resistance moving back to 77. And look, we're on our way to 33.82. Confluence in here, not too much low with the trend line. Someone was talking about buying the dollar CAD earlier in the room. I said, hey, look, support's here at 33.82 if you're going to be trying, stepping in and trying to buy it and step in front of this train. But that would be the area to go in and come in at. So things are starting to, obviously turn lower here. Look, we talked about this. This was going to leave a bad taste in the bulls, and we made the case. As I said, it's always good to put yourself on this in the shoes of the other trader, to act like as if you were long. If you're trying to scout and say, should I be selling this? Say, wow, if I was long, I finally, after walking through the desert over and over, you're finally there seeing the water, the above of 35, and then look, next trade day gets slapped in the face, and you're like, you know what, I've had it with this thing. If we break 34.77, I'm out. Well, I'll wait till 34.60. Well, I'll wait till 34.50. Well, look, folks, it's going lower and lower and lower. So I think we're really opening the door for a pretty good retracement here on the dollar CAD, because look how long this lasted. If we had taken up more, this thing could have really launched up. Look how much work was done. So, looks like we'll be sliding back in here. Looking at the euro, we talked about the euro, and we'll get back in here. Look, the euro, here's the deal on the euro. A lot of people are saying, oh, well, things are so terrible in Europe. Well, you're right. Tell me something we don't already know. But here's the deal. It's all, I have a saying, it's all relative, meaning everybody already knew that the Eurozone situation was in the dirt, okay? No news there. But the point is, what's been the case with the Federal Reserve? So, or in the interest rates or the outlook for the dollar. Hey, look, we're going ahead. Things are, the best economy, blah, 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 blah. Rates here, rates there. And look what's been happening. Rates have been falling. Like I said, 2 Thursdays ago, the worst manufacturing data in nearly a decade. So once again, like I said, things are now, instead of, if you're looking at I'll give you an example. I like to put things, in analogies. Okay, so if you bought the euro, I'm not saying about buying it so much, even when it was lower here, but I'm saying is, if you're taking the other side of the euro and saying, I think I should be bullish, and you were wrong, basically you're just falling out of a 1-story window. Can't break your arm. Maybe you might sprain your wrist, okay? But look at the difference with the dollar. Where the dollar's been is you're over here making the case, okay? If I'm just saying, if someone was continued to remain bullish, if you're bullish the dollar up in here, you got all kinds of space to be wrong. All kinds of space, okay? You're wrong on the euro, not that you're necessarily being bullish, but I'm saying look at the differences, okay? Okay, I got long the euro at 11:30 and it's breaking lower. Okay, you've fallen out of a one-story window. You fall out of the window here on the dollar, they're going to call the undertaker for you, folks. So that's what I'm saying is, and this is the thing that we've been looking for. We talked about this. Dollar looks set for a pullback. Now, this is the analysis from this weekend, well, because we've been talking about looking for a turn of the dollar. Looks set for a pullback. The first target is 96.63. That's a 38%. There's initial support at 97.20. Well, that 20 did hold initially, but look, we're pushing lower. Now, our bias chart today is for 96.81. I like this. I said this in the European crossover. I like the area, the 97. We talked about that. We even showed it right there. Look at that. You got a nice little bar coming across. But there's a potential for this still to roll over. And one of the things that we're looking at, we mentioned in the crossover, was that we had several Fed speakers. So it was likely that they're probably going to state basically the obvious, which is the concern, hey, things may be slowing down, whether or not they're going to employ the idea of any cuts or whatever. The risk was for the dollar to move lower. Okay. So henceforth, that's what we're seeing. So when you look at the euro, look at the euro. We'll just continue to move higher. And the thing is when we fell back in the euro, just like yesterday, we weren't giving up that 112. Okay, so now you can look at it from a price structure standpoint. We weren't giving up that 112. That's where the idea was we could push even higher. We had our buy chart positions from the prior European crossover were at 1220. But of course, things turned around when Bullard mentioned about a possible cut. So that opened the door higher. But I'm saying is if you were thinking, oh, this euro, it's going to fall all apart, I'm telling you, well then, once again, put yourself in another person's shoes, okay? I shorted here, and then I shorted 1210. You're thinking, well, at least they're going to come back into the teens, like 1215 or something like that or whatever. And look, this thing barely dipped in the 20s. And look, now it is taking off again. You see what I'm saying? So, things are changing. They're turning around. It's not so much the Eurozone doesn't have problems. It does have problems, but guess what? Tell me something we don't already know. And once again, from a technical standpoint, if you're wrong on the euro, from when it was way down there, you're probably going to get a sprain wrist when you fall out of that one-story window, okay? You going in, you're wrong, and you're long up in here, and you're buying up in here in the 98s and 97, 80s or whatever. You fall out of here, they're calling the undertaker for you, folks. So that's the difference why you can see a further push in the euro if you want to look at it from that standpoint. Same thing here. Look with the dollar CAD. Okay, so here we go. Dollar CAD. We had 34.15. This actually held the market this morning. There was our bias chart. Our target, like I said, we're looking for this thing to come down to much lower, but the first real support is 33.82. But there's our 34.15, and I think that held it actually to the pip. Look at that, right to the pip. We talked about this in the European crossover webinar. We always go with the touches coming across all these touches. It held it to the pip and rallied 25 pips, and now here we are sliding down again. And then, like I said, when you look on the daily, you see where they hit that 33.82. So if you're trying to buy it, it's different if you're trying to buy it for short covering. We've already had a pretty good little fall, so maybe they'll see a little bit of a bounce from that 33.82. But once again, better to let, like I said, the saying goes, Art Cashew say, second mouse gets the cheese. And believe me, I know, because I've been the first mouse lots of times trying to jump in too early or trying to stand in front of a train. So once again, like I said, that's how you have to go and look at it. Peso sliding back here. There's some talk that they're going to try and work something out. We did make this run up in here, and they tried to come back up, and they've started to slide back. So we'll see where that plays itself out. Looking here with the dollar yen. Look on here. I don't know why these charts just seem like by themselves they change. It's frustrating. So I wasn't even looking at oil. So same thing here with the dollar yen. We had a chance to go and move higher. Looking at today's bias chart, posted in the room was that, hey, look, dollar yen 837, high today 836. Okay, right there, 836. Right there, 836, 835.9. Okay, so 830, so we turn around and start to rotate lower. Really, if you think, and I pushed it out in the room because I was saying, CC for the other yen pairs, because the dollar yen wasn't reacting to the same extent that the S&Ps are. Look at the S&Ps; they're close to their highs, and look at the dollar yen; it's already been rotating lower. So that's why that was actually the primary reason why I posted a chart in the room and said, "Hey, look, resistance is 837 CC, yen pairs. So if you're trading the other yen pairs, keep an eye, because this thing isn't making any moves and may indicate that we may not have a whole lot to run on the other yen pairs. Speaking of which, let's go and take a look. So if you look here with the euro yen, we haven't added much. You see what I'm saying? It's not like, and we had our buy chart resistance. It can come all the way up to here, to 122. But you can see here that we're just not getting much juice. And that's what I'm saying, because when you look at the dollar yen, they're not going to trade the same, okay? But if you look across the rates, it can give you an idea of, hey, how much more do we got? Like, look at here with the sterling, with the guppy. You see what I'm saying? Just like the dollar yen, look, you can see it's already, quickly came back. Now that might be because, let's say, it's because the sterling's been so weak. But even with the euro's not turning around and going gangbusters. You see what I'm saying? That's what I'm saying when I was posting about the dollar yen is, hey, watch out on this. Now looking here at the Aussie yen, we're getting a little bit better juice, but don't forget, quite often the Aussie yen sometimes people will use that as a proxy to basically trade the SPOOs, you know what I mean? But look at that. Look, if you look at what the SPOOs are doing, and you look at what let's just take a quick run to that sector. Look at the SPOOs. I mean, they're just blowing and going. Look at that. Nice rally, right? And look at the Aussie yen. I mean, that's a bit of a disappointment, wouldn't you say? I mean, it's moving higher, but I mean, look how much the SPOOs have rallied. And look, I mean, what, from here in this area where they jumped up, what, we're up 24 pips? I mean, that's what I'm saying is that was my take, is that when I posted about the dollar yen, hey, it's close to, when I posted, I think it was at 825. I say, hey, look, we got resistance at 837. So meaning there's not too much juice left. So you may want to tighten your stops or not expect a whole lot. And we're just not seeing it here. We've already seen the euro yen pair back a little bit, not a whole lot, but we didn't add on to the gains. We're about 10 lower from those gains. Euro Aussie is kind of dipping a little bit lower, just kind of hanging around here. This caught that high to the pip yesterday in Asia, and then we've kind of fallen apart. Once again, we're still not doing a whole lot with anything at this time. Kiwi, look at this. Kiwi yen, that's the one that's been really holding up really well. And look, now that one's giving a little bit more extra juice, but the Kiwis overall held up very well. So let's go back into the main screen. And speaking of which, another market we talked about yesterday, and let's get to that real quick, was the gold market. And the reason I was referencing this, and actually let's go back to the second screen because you can see things a little bit more clearly. We referenced this yesterday because people were trying to take the other side of this thing when it was in the low teens. And I was like, This market wants 1323, and it could even push a little bit higher, but then we did almost make it to 1330. We actually came back, shedded about $8, and here we are pushing higher. The thing is, with those lower interest rates, the gold market loves that idea. Obviously, you can look here. You can look, if you put a trend line, you can see this breaking this nicely, open the door. And trying to step in too early in gold is not a good thing. And if you think about it, like I said, look how well gold's holding up despite the rally we've seen in equities. And really, people are starting to, in all likelihood, we talked about that, position themselves a little bit into gold. Maybe they've had enough of the equities and say, you know what, I'll put a little extra money. So there's going to be that, what I call an undertone bid. Speaking of undertone bid, was what I was talking about, mentioned also in the room, was with the euro. Because like I said, it's going to have that undertone bid because it's not breaking any lower. So think of it this way. Anybody that was short, let's say they were short yesterday, and they were short from 1180, and maybe somebody else shorted at 1215, when somebody was short from here, and then they added some more. They're thinking, well, I should be able to get out around 1215 at least. Maybe if I'm lucky, it'll drop down to 112. And it's not. So as the market holds, anybody that's short, this is why we're rallying right now. Anybody that's short from this morning or from yesterday, they're all having to pay to get as it gets up. So they're actually adding that buying power. And the market knows that. It doesn't come from nowhere. Market goes. So that's why I posted on here. I go, it's going to have an undertone bid. Because like I said, you just hold, and then those that are short and wrong, they're going to be paying up. And the market knows that. The market punishes folks. So it's going to keep the bid up. And the more it keeps the bid up, the more they keep putting the toes to the fire until they cry uncle. So there's the take there. Now, we talked about that with the euro. Let's go back in here. And we'll just go and wrap up quickly. Posted this chart in the room yesterday as we're breaking up higher. Had a nice little level here at this 1258, but we have a triple confluence, and we talked about this in the European crossover of right here, 1280. You can see that. Very nice here, 1280. 1277 is the 50% of this entire move, and had the arrows over here. 1276 is 161%. They actually stopped right there and saw a pretty nice little pullback. But we can break a little bit higher. Here's my take on the euro. I thought that we could hold here, okay? So we dip back. It'd provide a little bit of a buying opportunity. I think we can probably spook some people and knock some people out. And I wouldn't try and step in the way right now. I think you could maybe even let this run up potentially to about, really this whole area is good right there. Let's say almost 13. Okay, that might even be pushing it past this 30, probably anywhere up into, see right in here, 1292. We can hit some stops. My take is that ahead of the ECB, which obviously would be Thursday, then you probably see this thing pare back. Think of it once again from a price structure standpoint and I'll leave us with that. So anybody's been short, like I said, you got to imagine maybe some people were short from here. Oh, the euro's a piece of crap. It'll never rally. I don't care what anyone says, but I'm selling right in here. Okay, great. Any break above 12, that's just a give. Okay, great. Then Bullard says his comments, oh, well, that's a bunch of BS. It'll come back. And then it doesn't come back. So we push even further. So my guess is that we can push in. We might, I don't know if we'll do it here in the US session or maybe in the Asian or early European session. We can knock the stops here. And then as we go into Wednesday, going into Thursday, we can see the euro dip back, depending on what you may or may not believe what Draghi may say. And then from there, I think, once again, I think that the dollar is in for a pretty decent little correction. Doesn't mean it's going to a heck in a handbasket, but nonetheless, we can certainly go on and move lower from these levels. And things just point that way. Look at it. Look how high up it is. So just coming back to this trend line here, and I'm looking for 96.63 to 38%. You got a little bit, you can even overshoot it a little bit down to here, about 96.48 maybe, spooking up people. And then from there, we can get a decent little bounce, and then we'll probably have to come maybe a little bit low and do some more work. But we shall see. 96.24 is that old pivot. So that's all we got. Thanks for joining us here on the, I was going to say New York or FX wrap up. Have a great day trading.